share-based payment according to MFRS 2. Okay, share-based payment is quite a challenging topic. It comprises of lots of things that you need to learn. The time allocation for share-based payment is 6 hours, that is 2 weeks. So we have lots of things to go through. However, I think it will be appropriate for me to divide the lecture into several parts for you to have a clearer understanding during the explanation. Okay, at the end of the whole topic, you should be able to explain the different type of share-based payment. Discuss the requirement of MFRS 2 in terms of recognition and different type of the share-based payment. You need to take into consideration how to account for equity settled transaction, cash settled transaction, or choice of equity settled and cash settled. We have account for share-based payment to third party, and also share-based payment to employees. And finally, you must have the ability to explain the disclosure requirement of each type. Okay, so we need to know what is a share-based payment. Okay, share-based payment simply mean that payment for goods and services are made by either issuing equity instrument of the entity or making cash payment based on the price of entity shares. Okay, normally when you acquire goods and services, when you buy goods and services, you either pay by cash or you hutang. Okay, it's considered as liability. Okay, that is the normal condition of acquiring your goods and services. However, in a situation of share-based payment, you buy goods and services, you dapat goods and services tu. In return, you bayar dengan shares. Okay, you make payment by issuing your equity instrument, or you pay by cash tapi berlandaskan ataupun bersandarkan the price of your entity shares. Okay, so hopefully you can differentiate between the normal process of buying with the share-based payment. Okay, faham you beli barang, you tak bayar cash terus, you bayar sama ada ganti dengan shares ataupun you bayar dengan cash tapi nilaiannya adalah berdasarkan kepada your entity shares. Okay, so why is that happen? Why do we offer share-based payment? Okay, number one, it could possibly to retain staff and encourage employees to be committed to higher performance. Number two, it could possibly be to encourage the directors and staff to pay more attention to increasing shareholders' value. Okay, for example, you pay your employees share-based payment. Okay, ganjaran katakanlah when they retire or when they work for a certain duration, katakanlah 5 tahun, 10 tahun, they have this share-based payment. Okay, you bagi dia ganjaran bukan dalam bentuk cash, totally cash, but it can be in term of shares ataupun you bagi cash tapi pada nilaian shares semasa. So the employees akan bekerja dengan baguslah supaya harga saham syarikat tu akan meningkat. Bila harga saham syarikat meningkat, dia punya payment yang akan mereka terima in the future will be more as well. Okay, so in the standard distinguish between share-based payment to either third party for goods and services or employees. So when you go through the scenario or when you go through the tutorial question or past year's question, look into whether share-based payment is related to third party for goods or services, or is it related to the company's employees, because the accounting treatment will be slightly different. Okay, then there are specific date or time period that are relevant for recognition and measurement of share-based payment for service. They are grant date, vesting period, and also exercise date. Okay, like the other MFRS that you have learned, there is certain terms or definition that you need to understand first before you can proceed with the recognition, measurement, and so on. Okay, so what is meant by grant date? Okay, grant date is the date when the entity and the counterparty agree to the share-based payment and the entity confer on the counterparty the right to the equity instrument of the entity, cash or other asset provided the vesting conditions are met. Okay, so the grant date is the date when the entity and the other party agree to the share-based payment. Okay, because katakanlah you beli barang, the company buy machine. Okay, you're going to get the machine in the normal condition. The supplier will get cash. Okay, that is the normal condition. But you can have a share-based payment. Okay, the grant date is where both parties agree to the share-based payment. Okay, the supplier agree to receive share-based payment instead of receiving cash macam biasa. So the date is known as the grant date. Okay, and then you have a vesting period. Okay, vesting period is a period during which the specified vesting conditions are satisfied. It can be a specific time, such as when the employer has fulfilled the term stipulated, such as period of service or performance. You will come across a vesting period more when it's involved transaction with employees. Okay, then you have a vesting condition. Vesting condition are the condition that the counterparty has to fulfill in order to receive the share-based payment. This include completing a specified period of service or achieve a specified performance level. Okay, so this is the terms or definition that you might want to come back again when you come across the condition given in the tutorial question or in the past year's question. Okay, so the three types of share-based payment transaction. Okay, or in other words, I would say that share-based payment can be divided into three types. First one is known as equity settlement. An entity issue its own equity instrument or those of another member of the same group as consideration for goods and services. An entity issue its own equity instrument, katakanlah equity instrument kita adalah ordinary shares. Okay, or those of another member of the same group, maybe the subsidiaries ordinary shares. Okay. Second type are cash settle. An entity or another member of the same group pay cash calculated by reference to the price of equity instrument as the condition for goods and service received. Okay, so example share appreciation right. So make sure you know what is the difference between equity settle and cash settle. If you have equity settle, you agree a share-based payment on equity settle, maknanya your supplier will receive equity. If you refer to equity as share, ordinary shares, method pembayaran dia akan terima ordinary shares. However, when you have cash settle, share-based payment tapi cash settle, in the settlement, bila nak settlement period, the supplier will receive cash. Dia bukan terima shares. They will receive cash. But the cash amount is based on the equity instrument. Okay, the cash amount is based on the equity instrument. If we look at from the employee's contact, kalau equity settle at the end of certain period, dia akan terima the company ordinary shares. So when the employees terima company ordinary shares, satu dia akan jadi owner of the company. Dua, kalau dia nak dapat untung, dia boleh jual ataupun dia boleh terus simpan the ordinary share in order to gain a dividend or wait for the share price to go up higher. If they have cash settle, at the end the employees will receive cash. Cuma jumlah ataupun nilai yang cash tu bergantung kepada harga semasa of the equity. In this example, we take it as ordinary shares. Nampak tak beza? Satu dia terima shares, satu dia terima cash tapi bersandarkan pada harga shares. Okay, dan type yang terakhir adalah choice of equity settle or cash settle. So kalau you faham what is equity settle, what is cash settle, then you should be easy. It will be easier for you to understand the choice of equity settle of cash settle. This is a situation where the supplier of goods and services or the entity receiving those goods or services may choose whether the entity settle in cash or by issuing equity instrument. Okay, so in the third type, okay, the supplier, okay, or those who receiving the goods, katakanlah supplier and the company, okay, they have the option, nak pilih equity settle or they want to pilih cash settle. So if you identify that is in the third type, then the accounting treatment will be different. So why is it important for you to know the three type of share-based payment? Is because the accounting treatment is different for each type of share-based payment transaction.